Let's be real. Solo trading is a grind. The early mornings, the late nights, the emotional roller coaster of green and red candles. For years, it's been the ultimate test of patience, skill, and endurance. Yeah, one trader, one screen, chasing the dream of financial freedom. But lately, the game is changing fast. AI, automation, and big trading firms are shifting the landscape. Suddenly, it feels like the odds are stacking up against the little guys, the solo traders. Think about it. AI-driven algorithms execute trades in milliseconds, analyzing data that would take us hours to process. They don't sleep, they don't hesitate, they don't second-guess themselves. Meanwhile, we are stuck debating whether the head and shoulders pattern is legit or just a trick of the eye. And it's not just AI. Markets today are more volatile than ever. Economic conditions shift constantly, and one global event can send everything spiraling. For a solo trader, it's like trying to surf a tsunami with a boogie board. Then there are the big players. Hedge funds, trading firms, institutions with endless resources. They have entire teams of analysts, developers, and traders working around the clock. They are the whales, moving markets like a single trade, while we are left riding the ripples. Worse still, they have access. Insider data, high-frequency tools, and institutional advantages we can only dream of. It's not a level playing field, so how do we compete? Now, before we continue, I just want to remind you that the access to the first chapter from our course where we teach our strategy is totally for free. You don't need to enter your email or any personal information. Just click the link in the description below and start learning. So, is solo trading dead? Not necessarily, but we can't ignore reality. The solo trading era isn't ending, it's evolving. And if we want to survive, we need to evolve too. Maybe that means embracing technology instead of fearing it. Maybe it's about adapting to market changes instead of resisting them. Or maybe it's about finding niche strategies that institutions haven't optimized yet. Yes, the challenges are real, but so is the opportunity. Because while big firms have resources, we have something they don't: agility. We can pivot fast, adapt quickly, and trade with independence. So, is this the end of solo trading? Maybe for those who refuse to adapt, but for the rest of us, it might just be the start of something new. Let's talk about AI in trading, because whether we like it or not, it's here and it's taking over. Big institutions aren't just experimenting with AI, they are investing billions into it. In 2023, the AI trading market was worth around $18 billion. By 2030, it's expected to hit $35 billion. That's almost double in just a few years. So AI isn't just a maybe in trading anymore, it's the future. Between 2013 and 2022, corporations invested nearly $1 trillion into AI. The peak was in 2021, with $276 billion spent in a single year. That's more than the entire GDP of countries like Portugal or New Zealand in the same year, all going into making AI faster, smarter, and, let's be honest, harder to compete with. As of 2023, 76% of financial institutions are already using AI. And here's the kicker: 80% of global equity trading is now executed by AI algorithms. That means most of the trades moving the market aren't made by people anymore. They are made by machines that don't hesitate, don't sleep, and don't let emotions get in the way. And it's not just banks. Over half of hedge funds now run AI-driven trading strategies. These systems analyze market data 10,000 times faster than a human ever could. While we are staring at charts trying to find an entry point, AI has already processed years worth of data and placed the trades before we even click the button. And it's not just banks. Over half of hedge funds now run AI-driven trading strategies. These systems analyze market data 10,000 times faster than a human ever could. So while we are staring at charts trying to find an entry point, AI has already processed years worth of data and placed the trade before we even click the button. Hedge funds using AI have increased their trading volume by 25%. They are trading more, faster, and with more precision than ever before. So what does this mean for solo traders? It means the game has changed, and competing against AI-driven firms is like bringing a knife to a gunfight. But does that mean solo trading is over? Not necessarily. It just means we need to evolve. The market isn't what it was 5 or 10 years ago, and neither the competition. So the question isn't whether AI is taking over. It already has. The real question is, how do we adapt? Trading isn't just about buying and selling anymore. It's about who's buying and selling. Right now, the market is split between two types of players: institutional traders and retail traders, or in simpler terms, the giants and the solo players. Institutional traders, hedge funds, pension funds, mutual funds, move billions of dollars. They get access to exclusive IPOs, better transaction fees, and massive block trades. They spread their orders across multiple brokers to keep their moves under the radar. In short, they control the market. Retail traders, on the other hand, trade with their own money. We work with much smaller amounts, pay higher fees, and don't get the same level of access. The upside, our trades don't shape the market. The downside, we are swimming in the same waters as sharks that do. Let me be clear, this is just my experience. Trading is personal. What worked for me may not work for you, and just because I lost money doing something doesn't mean no one can make money with it. Alright, my first trade, a disaster. I jumped into index futures without a clue. I guess someone told me you can make way more money trading futures. And that was all I needed to hear. So I bought and sold purely on gut feeling. No strategy, no analysis, and of course, I kept losing. But I didn't stop. I thought, maybe I just need more experience. So I kept trading the same way, minute by minute, trying to outguess the market. The result? I blew my account. Not once, not twice, 15 times. I tried everything: stocks, indices, currencies, commodities. Then I moved on to options, buying huge quantities without understanding a thing about option Greeks. Every time I made 10k, I'd lose 30k right after. Eventually, after years of losses, something clicked. Not in a sudden aha moment, but gradually. I realized that predicting the market tick by tick was a fool's game. And the only way to win? A solid strategy, a deep understanding of market behavior, and most importantly, self-discipline. Today, I trade everything. Mostly I sell options, I buy stocks when I see real value. And I've been consistently profitable. And yeah, there is no holy grail in trading. It's a mix of experience, strategy, and personal growth. The key, keep trying, just don't lose so much that you can't get back up again. Alright, these videos take thousands of dollars to make. The channel is not monetized and we don't accept any sponsors, meaning there is no outside funding keeping this channel going. And the only time you will ever hear me mention anything is when I recommend my own trading course. So if you want to support this channel, the best way is simple. Hit that like button, drop a comment, and subscribe. Right now, we have 71 amazing people subscribed, and our goal is to hit 1 million. Trust me, we are going there.